You're listening to episode 23 of Let's Talk Bitcoin. Hi, and welcome to Let's Talk Bitcoin, a twice-weekly show focused on the ideas, projects, and people building the new digital economy and the future of money. If you're brand new to Bitcoin and would like to learn more, please visit letstalkbitcoin.com/learn to be directed to the Bitcoin Education Project. My name is Adam B. Levine. I'm a writer and speaker who likes to talk about complicated topics in understandable terms. Joining me in our twice-weekly search for clarity, Andreas M. Antonopoulos is an expert in distributed systems and decentralized networks.
Hi, everyone.
Dr. Stephanie Murphy is a scientist and syndicated radio host.
Hello.
Because of the length of the interview with John Matonis on today's show, we've opted to release it as a separate file entirely. You can find that at letstalkbitcoin.com.
Last Thursday was a busy day for me, a patriotic day, and I enjoyed a couple of events that were very closely related. In the morning, I participated in a Restore the Fourth protest march from the Civic Center in San Francisco all the way down to Embarcadero, and from there to the AT&T building, where room 641A, where all the traffic is siphoned into the National Security Agency, is located. We conducted a little protest march. At that protest, I talked to a lot of people about Bitcoin. I was pleasantly surprised to see that the majority of people had heard of Bitcoin and did see Bitcoin as a very important tool in regaining control over our lives and stopping broad government surveillance. So that was an interesting correlation. Right after the Restore the Fourth protest, I went to participate in the first Buttonwood SF, the first Buttonwood San Francisco, which is an open-air currency exchange for trading Bitcoin, Litecoin, and other currencies. At that event, started by John Light. Thank you, John, for organizing that. It's going to be every Thursday at 7 p.m. in San Francisco. The exact site may change over time. Check out meetup.com if you're interested for Buttonwood SF. We had 7 people, traded some Bitcoin and some Litecoin. It was a pretty small crowd, so there was no, shouting bids and asks and puts and calls and offers and things like that. But it was just a very informal gathering. We got to chat and trade some currencies, and it was great. But more importantly, that was just the beginning. I would very much like to see more of those pop up because that is a very good solution to the centralization of exchanges.
Did you guys use any of the software solutions that we've seen floating around? I know that there's a Buttonwood software project that's in, I think, an early alpha stage. Were you guys using anything like that, or was it more informal?
It was more informal, just passing from smartphone to smartphone. Although we did have one of the community organizers from Open Garden, which is a mesh network for smartphones that allows you to establish a localized mesh network and link it up into the internet in an environment like that. So that was very exciting. We didn't get to use it because we didn't have a big enough crowd. But certainly I think that's part of the goal for the next Buttonwood.
At the one in Los Angeles, we saw that there had been some sort of transcontinental transactions. You guys have any connection with any other groups, or was this strictly a local affair?
This was as local as it gets. Everything was done in person, and getting to meet other Bitcoiners was one of the best parts of that event. And again, 7 p.m. this Thursday, Buttonwood SF happening again. I'll be there.
I saw a forum thread on the Bitcoin Talk forum, and, there's some rumors on there and everything, but there's also a lot of people who know what they're talking about, and there's some serious issues that get talked about, of course. I don't know if you guys were following this. Mt.Gox had some kind of a moratorium on withdrawals for the past couple of weeks. And that moratorium was lifted, I guess, on July 4th. And here's their statement regarding that. They said, "Dear Mt.Gox merchants, Mt.Gox is happy to announce that global account withdrawals have now fully resumed as of today," and that was on July 4th, "after several days of testing our new system for processing transactions. We want to keep you informed about our progress in the arena and especially ensure our customers that their funds are accessible. While we announced that there would be a temporary hiatus on withdrawals, during our testing over the past 2 weeks, we managed to process over $1 million to customers. As this required a great deal of manpower and was not a perfect solution, we are quite happy with the progress we made despite the conditions. Mt.Gox has now formed relationships with several new banking partners in both Japan and around the world, and we're still in the process of finalizing even more. That means we'll have increased stability and ability to transmit withdrawals going forward. The new system is just getting underway, so there's still a backlog of withdrawals that we need to process. Our team is working hard to increase transaction speeds, but there is approximately a 2-week backlog that we we need to overcome. It will take a few weeks to get back to normal. We thank you for your patience during this time. So basically what they said there was that we were having problems processing these withdrawals. And as a result of that, we had to do it manually, and it required a lot of manpower, and it was not a good solution. So we formed relationships with these new banking partners, and this is going to totally solve the problem. But we still have a backlog that's going to take us a couple weeks to get through, and we might not be able to process your withdrawals. It's a pretty confusing kind of statement, and it led some people to speculate that, maybe they're insolvent. Maybe they just don't actually have the money to fulfill these withdrawals. Here's a quote from one person, Nagel, on the Bitcoin Talk forum. They said, "My guess is that Mt.Gox did what so many crooked bankers have done in the past. They speculated with customer funds. Here's a typical story. Just think, all those millions of dollars in some bank account where interest rates are zero. It must have been so tempting to put them into something with more earning potential. Nobody would even know, right? Then the investment lost some money. And like so many crooked bankers in the past, they tried to get out of the hole by a riskier investment. That didn't work either. So they tried stalling on payouts while encouraging more people to send them funds. That worked for a while, but the customers got suspicious. Then a few big customers demanded their money, and the whole scheme collapsed, taking the business into bankruptcy. It's a story that's been repeated many times. MF Global, Madoff, Barings, and now on a rather smaller scale, probably Mt.Gox." What do you guys think? Do you think there could be anything to that?
I think that it's important to note that liquidity and insolvency might look a lot the same, but they're not necessarily the same thing. There are legitimately scenarios where money is simply not accessible, especially once you're talking about on a very large scale. The biggest problem that Mt.Gox has is that they are really bad at this whole communication thing. Like you said, that was an unclear thing that they tried to communicate. And it leads to this sort of speculation because by giving partial yet obviously incomplete information, you wind up in a situation where people just start making stuff up. And because there's nothing out there that is actually legitimately the right answer, all of this suddenly starts being plausible.
I agree. We don't really know what their finances look like. And it's all, of course, speculation, which is why I try to preface this by saying, of course, this is just a rumor. There is a legitimate problem here, which is that people are wondering, hey, why can't I withdraw my money from this exchange? What's going on here? Why is this different? Why is this not reliable?
Well, actually, I think that right there is what's reliable. Mt.Gox reliably acts in this way. Whenever anything bad happens, they have a terrible response to it. They're really bad at communicating. They have a tendency to lock down accounts. I mean, at least this time it was just US dollar withdrawals. If you guys remember last year, Mt.Gox itself was shut down for a solid week. It would be surprising to me if they were acting in a different way at this point.
I think the real question we should ask ourselves is, what is the fractional reserve ratio of Mt.Gox?
God, I hope it's nothing.
I think it's pretty clear that it's not nothing. All of the Bitcoin on Mt.Gox is off blockchain until it's withdrawn. They can operate with dollars in the same way until the dollars are withdrawn, which means that Mt.Gox can effectively run flow-through operations at a higher rate than the actual reserve currency they have. But that depends on not everybody trying to withdraw either type of currency simultaneously, just like any other bank. I think they have some currency reserves. I'm hoping those are pretty high compared to modern banks, or legacy banks if you like. But we don't know because they don't disclose any of that. Combine that with some sketchy sentiment, some sketchy moves and the sentiment that creates, and you have the perfect conditions for a run on the bank. And that's really what we've seen. We've seen a slow motion run on Mt.Gox, which has led them to have cash flow problems. Illiquidity is just insolvency in its early stages. And if you don't fix that illiquidity, it becomes insolvency. So the two are not entirely different. They're just shades of the same range. I think in this particular case, what we're seeing is cash flow and illiquidity problems, both at specific banks that are related to Mt.Gox for the withdrawals, as well as potentially in Mt.Gox's balance sheet itself. But we don't know because there is no disclosure of that. That's a bit scary, but at the same time, we also see a rational investor response, which is to diversify their portfolios across many more exchanges. Gradually, we're seeing Mt.Gox losing its absolute majority, the transaction volume, and that's probably a good thing. Now, the question is, can Mt.Gox stay liquid enough to calm the jitters, Or will this escalate into a full-blown panic, at which point Mt.Gox could very much become insolvent? I think if everybody tried to withdraw everything at the same time, it would result in exactly the same problems we've seen before. A halt in trading because of inability to support the volume, a halt in withdrawals because of lack of liquidity to support those withdrawals, which only exacerbates the panic and then leads to a massive price drop. These are things that happen in illiquid, low-volume markets. We are very much at risk of whiplash in the market because of these situations. What we need is a lot more volume and a lot more liquidity to support market operations, which, by the way, is why I was really happy to hear about the Winklevoss fund.
Are there any exchanges out there that don't operate in this fashion? That because Mt.Gox has lots and lots of offline Bitcoin reserves, right? And that's the way that you store them in order to keep them safe. You put them into cold storage, as we've talked about on earlier episodes, and you keep them in a way so that they cannot be accessed from online and therefore are not vulnerable to any sort of hacking attempts or anything like that. But the thing that we haven't talked about is that even when the Bitcoins themselves are offline, when the private keys are stored offline using this method, there's no reason why this isn't transparent. I mean, there's no reason why there isn't a giant list of all of Mt.Gox's offline storage wallets containing all of the various Bitcoins that are being held for all the various people. I mean, is there a reason why we don't have that sort of transparency in this market when it is possible and frankly free?
Yes. If they told all the people out there that they in fact don't hold the Bitcoin that they're supposed to hold, that would cause an immediate and instant panic. And my best guess is that the reason they don't publish their reserves is because they don't have as many reserves as the daily volume would suggest. And in fact, there's no reason for them to hold reserves of that magnitude because they can trade Bitcoin that they don't hold just as easily as Bitcoin they do hold. And essentially, they can let the volume of transactions outpace their actual Bitcoin reserves or dollar reserves. And they don't have to disclose either to anyone. That's a really dangerous situation, but I think the reason we don't have visibility into that is because it's probably worse than most people think.
So that explains it for Mt.Gox, but there are lots of other exchanges out there that are looking for ways to differentiate themselves, and I don't see anybody doing this. I mean, so is this just a competitive disadvantage, or is it everybody is playing this fractional reserve game? I mean, I'm trying to think it through, and do you think that this just hasn't occurred to these people, or that they are intentionally not providing the transparency that is available because nobody else is doing it?
I think it hasn't occurred to the customers yet, and as soon as the customers begin to realize the risk that is posed by illiquid exchanges, then they will demand more transparency. Now, in the real world, if you like, in the traditional banking system, that's one of the roles the regulators play, although what we've seen is that they fail very badly at that role while mostly enabling further monopolization of the banking system. But one of the downsides of not having any regulation is that there is no such transparency. The upside is that if we did have regulation, it would quickly be corrupted to ensure the monopoly. So what we need is a market solution. And the market solution is demand from the exchange more transparency, more accountability, and more visibility into their reserves. And if they don't give it to you, move. That has to be overcome by the corollary or converse, which is there is a sucker born every minute, and most of them become Mt.Gox customers.
Yeah, but where are people going to move to? I mean, I agree with you, Andreas. I was about to say that I think that the consumers haven't been demanding that transparency, and maybe it hasn't occurred to them because they're not used to it. I mean, look at the legacy banking system. You just cannot get that, and so maybe nobody even thinks to sort of audit an exchange or something like that. Where are they going to go? I don't even see any exchange kind of moving in that direction of greater transparency or anybody even talking about offering that kind of a product. Is everybody just going to start going to local Bitcoins or something like that, or hiding their Bitcoins under their mattresses and paper wallets? I don't know. It kind of makes me want to do that.
I certainly would like to see some of the smaller exchanges develop more and become larger players. So I would rather have a world in which there were 5 or 6 different exchanges sharing, 20% of the market at most, rather than one exchange with almost 50% and then everybody else with low double digits. There's others. There's Bitstamp, there's CampBX, and there's a lot more new ones emerging. I think people should diversify more. I don't hold any money in these exchanges. I move it out immediately. If I do trade, I trade with a variety of different exchanges, and I abandoned Gox quite a while ago.
Let's Talk Bitcoin is heard each week by thousands of people who are participating in the new digital economy. Our listener base of Bitcoin owners, miners, investors, technologists, and merchants is growing fast. We offer a limited number of short advertising slots in each show to keep our listeners engaged and to provide maximum impact for our sponsors. If you'd like to talk to us about Let's Talk Bitcoin, send us an email at sponsors@letstalkbitcoin.com.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB.
Here on Let's Talk Bitcoin, we kind of go out of our way to not really focus on the price because ultimately the things that we're interested in Bitcoin for are almost completely aside from the price. The price is what it costs, whereas the thing is what it can do. And it's the what it can do that, at least to me, is so appealing and attractive about Bitcoin is that it has all of these characteristics and things that simply cannot be done in other areas. And so the price to that is irrelevant, as I've said. That being said, over the last, 2 weeks now, we've been getting more and more requests to talk about the price a little bit. And so I figured this would be a good time to do so. You know, as we sit here recording this at 11:32 a.m. Pacific time on the 8th of July, the price currently sits at about $78.15. I think we got as low as 60 something. Has anybody been paying attention to the price?
Oh yeah, I've been watching it like a hawk.
60,
I saw
67.
something like 65 a couple days ago.
I bought at 67. I'm very happy.
Yeah. I know, I've been buying too.
Let's explain to people exactly what's happening in this market, right? So I think it's important to look at this market carefully and draw all the conclusions we can draw. And we can't draw any conclusions. And the reason we can't draw any conclusions is because markets are inherently chaotic systems. And what that means is small perturbations in the original inputs or the initial inputs through the chaotic principle can create very, very large movements in the outputs. That's what a chaotic system does. So you have a market that is global, that is open 24 hours a day, that has no barriers to entry, being buffeted by hundreds of thousands, perhaps millions of different inputs, media reports, market sentiment, people buying and selling, etc., etc. And all of these things get reflected in this very, very volatile and chaotic movement. I can make some market predictions. The market will be volatile. The price will change. And that's about it. You can't predict. You can't also look back in hindsight and say, oh, this is what happened. Now, you're going to hear on CNBC and all of these other financial shows, they spend 2 or 3 hours a day explaining to you why the market moved yesterday. And it's all lies, because if they actually could do that on an effective basis, they would be able to predict market movements, and they can't. All lies. No one knows why the price is 78.49 or 78.15. No one knows why it dropped 40%. No one knows what's going to happen next. And anyone who tells you that they do is lying.
There are no shortage of opinions, though. You know, there are a couple of thoughts that are going around. One of them has to do with manipulation. There's a guy who goes by Sir Bits a lot who has been threatening to come on the show and talk to us about the players who are manipulating the price and how there are all of these keywords and things that come into play and all this other stuff. I think that maybe there's a case to be made there because, again, as a new market that has a relatively low market cap, which is to say that the amount of value that's in the market is smaller compared to other markets that are out there, it is easier to push around the price of Bitcoin if you have an incredible amount of Bitcoin or an incredible amount of dollars to throw at the problem. And that incredible amount of dollars is a lot less than if you were going to try to do it with, say, like corn or something.
I don't think so. I mean, there are some pretty big players in corn and some pretty big players in pork belly. And the point is that all markets can be pushed around. Sure, this one can be pushed around more, but that volatility cuts both ways. So if you're manipulating the market, you're also taking an enormous risk, because if that market turns on you, and no one has the control that will allow them to not have the market turn on them, if that market turns on you, you will lose big. And that's even without leveraged buying or leveraged selling. If you're borrowing, right, you'll lose even bigger. The point is there are lots of opinions out there as to why the market is moving, but those opinions are exactly as valid as the market is moving because the constellation of Aquarius is in sync with the planet Venus. That is entirely equivalent in terms of validity as speculation about market manipulation, speculation about which piece of news caused the crash, etc., etc. It's really all just a load of bull.
Well, in the end, that's really what markets do, isn't it? A market is a system for integrating a lot of incredibly complex information about what the price of something should be or what the subjective value of something is.
Exactly.
And emotion. I mean, let's not forget about that. Emotion, beyond the information side of it, emotion plays a huge part in this. People lacking information act on what they feel is the best, act on what they think might be the best. And a lot of times what they do is the absolute wrong thing. It's like people who sell, in a panic when the price is going down. That's absolutely the thing that you don't want to do. If you're a smart market player, you essentially go against your human instinct, because that's where the opportunity is, in going against what is being, but again, this gets into like a recommendation space, and let's, again, I think Andreas really has it here. We don't know what's going on. We don't know what's going on, and the market is doing what the market's going to do. In a couple of years from now, it'll be a much more stable place because there'll be more players in it, and it'll be more insulated against sharp movements like this. But ultimately, we're in a process of discovery right now, and that's not an even or smooth thing.
I'd like to give you a technical analogy following up on Stephanie's very astute observation. A market is a mechanism that takes all of the existing information and compiles it into a single price. SHA-256 is an algorithm that takes a very large data stream and converges it down into a single value. That is also true, and it follows many of the same chaotic principles, meaning that it's very difficult from the inputs to derive the output. So anyone who says they have an opinion on why the market moved is saying essentially that looking at the hash output of a function, they can tell you what the inputs are. Yes, it does aggregate all of the market information into a single price, but that doesn't mean that you can take that single price and go backwards and figure out what market information moved it. You can't.
There's been a lot of talk about Bitcoin in China, and China, for a while there, was coming on as a really major player in the network space, and they had actually more nodes than really anywhere else. In this most recent update, the US has again overtaken the number of nodes. And I was having a conversation, it seems like there's a fundamental disconnect, even more so than in the United States, with the Chinese Communist Party and Bitcoin. It seems like it's very important for them to be able to track and control commerce to a certain extent, just as they control traffic on the internet, because it's about organization, and there are a variety of other factors we won't get into here. The point is, it seems to me that there is a conflict here. So I was having this conversation, and an event came up from 1956 called the 100 Flowers Campaign. So I'm going to read this from the Wikipedia entry. The 100 Flowers Campaign, also termed the 100 Flowers Movement, was a period in 1956 in the People's Republic of China during which the Communist Party of China encouraged its citizens to openly express their opinions of the communist regime. Differing opinions and solutions to national policy were encouraged based on the famous expression by Communist Party Chairman Mao Zedong: "The policy of letting 100 flowers bloom and 100 schools of thought contend is designed to promote the flourishing of arts and the progress of science." End quote. After this brief period of liberalization, Mao abruptly changed course. The crackdown continued through 1957 as an anti-rightist campaign against those who were critical of the regime and its ideology. Those targeted were publicly criticized and condemned to prison labor camps. Mao remarked at the time that he had, quote, "enticed the snakes out of their caves." Thinking about it, and that story, and the way that Bitcoin, on the one hand, is this freeing and enabling technology, but that at its core, it's a distributed ledger of every action that takes place on the network, it just sent a chill down my spine. And I was like, oh, well, actually, that makes sense. And I'm curious what your read on it is.
Are you drawing a comparison, Adam, between like maybe Bitcoin was created by some malicious person who wants to see who all the people are who value free exchange and liberty in financial liberty, and then somehow have this record of everything that they've done in the blockchain and somehow use it against them?
Yes, to a certain extent, but not quite that far. I'm not saying that I think that the Chinese Communist Party is responsible for the creation of Bitcoin. I'm saying that this is a public ledger. And again, if you have a situation like Bitcoin where it's all about networking, right? Network to network connections or node to node connections, and you have a limited number of exit points leaving a country to an international network, doesn't that mean that you can, over time, identify and correlate action within the network? I'm not saying they created it, but I'm saying that they are encouraging it. I know several people who have been on Chinese Central TV, CCTV, talking about Bitcoin for state-sanctioned discussions about Bitcoin. That has never really made any sense to me. Why would they be supporting something that they don't have any means to control or tax or any of these other things?
I think they have plenty of means.
Because it's anti-US.
That's a really big motivator. You know, at the same time, they also see the upside of actually having quite a bit of control over these currencies because they can be monitored. But I'd like to flip the question a bit. We see financial control as really powerful because it's probably one of the core means of control used in the United States. Control through the financial and banking system and surveillance through the financial and banking system has become very, very powerful, both with asset forfeiture and suspicious activity reporting, all of those things. But here's the thing. Financial control is a proxy for violent control. In a democratic environment, you need something more subtle than outright, barefaced violence. And so you need to have a more subtle way of controlling your population. And financial control is great because it allows you to obfuscate what's going on while at the same time exert enormous power, but in a way that's not very visible. My comment here would be that the Chinese government doesn't really need to do subtle control by proxy because they can apply barefaced violence directly on their population as necessary. I would say, in fact, that the United States is probably more interested in financial control than the Chinese because they can't, for the most part, apply the kind of violence that the Chinese government can bring. I'm not too sure that the issue here is, hey, the Chinese look at this and say, hey, great, this is going to be a way to control our population. They already control the population. They don't really need this to find out who the dissidents are because they have a broad network of on-the-ground spies. It's a captured society. You know, you have all of those situations where your neighbor could be spying on you and telling on you. In that kind of environment, financial control isn't really necessary. I think they're really looking to poke a stick in the eye of the world reserve currency, and quite rightly so. It's a means by which the United States controls other governments. So therefore, if the Chinese can throw off that yoke, they will. I don't think really it has to do with controlling their own citizens because they have much less subtle, more overt ways of doing that. I'm more worried about what the American government does with information control and financial control.
You know, it was interesting to me to see that 3-4 years ago now, there was an in-game currency that was created in China and that was used essentially for in-game commerce. And that was pretty violently put down after a number of years. And they had sought integration with the Chinese government, things like that. But it just, for whatever reason, they took a very hardline approach to it. And so again, it seems like Bitcoin is much more disruptive to their actions than any of these other little, stateless currencies that pop up in in-game capacities. And yet they're met with a very, very aggressive response. I just don't see why it would be different here. And I appreciate the poke a stick in the eye thing, but isn't there a better way to go about that than something that you can't control?
No, I think that's the draw. The fact that China can't control it gives them some certitude that no one can. It really represents a tremendous opportunity to create a global reserve currency that is independent of any state.
You've been listening to episode 23 of Let's Talk Bitcoin. To subscribe to our twice-weekly show, find us on iTunes, Stitcher Radio, or letstalkbitcoin.com. Thanks for listening.